So I find it interesting that a statistician official from South Africa is talking about the need for gold-backed currency. See, it's not just the everyday people, the body politic, or the everyday citizens, if you will, that are interested in gold and silver. Governments around the world are starting to get into it. Of course, we've been reporting on Basel III requirements and how gold has been made a high-quality liquid asset for the banking system, how the central banks are buying gold just like this to support their balance sheets.
Welcome to Gold Silver Pros.
Hey everyone, this is your host, Rob Kientz with �ＧoldSilverPros.com. This is our Thursday edition of the show. We provide you the latest in research and market news around gold, silver, and the economy. Today, we're going to be talking about how and why the millennials are the biggest gold investors, which may be a shock to everyone who thinks that millennials have no idea how to invest and don't look at the precious metals as a legitimate long-term investment. I'm going to show you data which basically proves that wrong. We're also going to bring in an update on the gold-backed currency that Russia is proposing, the rest of the BRICS nations will be participating in, as well as some additional information on various countries repatriating gold in the wake of the sanctions against Russia in the geopolitical arena. Let's go ahead and get started. We're going to start with the story on how millennials are buying more gold than either the boomers or the Gen Xers. This is a report out of Yahoo Finance that came out very, very recently, about a week ago. As you can see here, and it's in a study, I'll show you the study in a moment, but here are the bullet points. Millennials are beating baby boomers and Gen Xers when it comes to investing in gold, according to State Street in a study that they did. Demand for the precious metal, widely regarded as a safe haven asset, remains strong as recession risks loom. Gold has also rallied almost 9% year to date, approaching the key $2,000 mark, which would be near its all-time high. A safe haven asset protecting against market downturn, that is gold. It says here, the precious metal is possibly an ideal choice for older, wiser, and more cautious investors, such as those from the baby boomer generation, this Yahoo Finance article reports, but not really according to the world's number 4 asset manager. Millennials are the biggest investors in gold, beating baby boomers and Gen Xers by a big margin, according to a report from State Street, which cites the findings of a survey by SPDR ETFs. For those who don't know, SPDR manages ETFs in the precious metal sector, and they're doing surveys of their clients. So this is a legitimate study. Quote, on average, millennials have a higher allocation to gold at 17%, with boomers and Gen X lagging behind at just 10%. And millennials reported a greater appreciation for the convenience of investing in gold through exchange-traded funds, ETFs. George Milling-Stanley, chief gold strategist at State Street, wrote in a report. He goes on to say, again, quote, more millennials than boomers or Gen X replied that gold ETFs are the best way to invest, with 69% for millennials compared to boomers at 55% and Gen Xers at 35%, he added. Gold prices have climbed almost 9% in 2023 so far. Demand for the perceived safety of the yellow metal remains high as economic uncertainties run high, especially with the risk of a recession looming, according to State Street. As much as 88% of the survey respondents who currently have gold holdings believe the metal is a long-term investment, according to the asset manager. And more than 70% said investing in gold helped improve the performance of their overall portfolios, it added. The last quote, among investors who hold gold, more than half of all respondents say they expect to increase their gold holdings in the next 6 to 12 months. At 57%, the percentage of investors in gold ETFs who plan to buy more slightly outweighed investors in other gold investments such as bars and coins, gold company mining stocks, gold futures and options, and commodity funds at 53%, Milling-Stanley wrote. That's a pretty surprising report for most people in the gold industry, probably because most people I meet in the industry do tend to be my generation, Gen X or older. We definitely have had some millennials and even some Gen Zers. I've seen them at conferences and talked to them, even been interviewed by them on other channels. However, it's not seen as those younger generations getting the value of gold and silver. However, I would like to point out that those generations are probably getting hit in the gut by the recession and lack of job availability more than any other generation. In fact, this is a fact. I've been reporting this for several years. Demographic data shows that the millennials are not getting the same job pay. They're not getting as many jobs in their field, and they're not getting as many jobs, period, as previous generations. This is the first generation where this has been so pronounced and so long My generation had some challenges with that too, but we did okay for ourselves. The millennials really are the first ones in which we can definitively say they have not had the same economic opportunity as their parents, at least in quite some long time, probably for the entirety of modern American history, since we've had our Constitution, or at least as back as far as the data I can see shows, with possible exceptions. So in other words, millennials, because I think of the economic imbalance, are turning to different assets. And it's not necessarily only Bitcoin or those types of electronic assets that people will peg that they will invest in. They're also investing in gold and silver. The caveat, the big caveat to that is, and everybody will shake their heads when I say it, they're investing in ETFs. And we know in particular this PDR ETFs, GLD and gold and SLV and silver, don't allow regular shareholders who have bought the paper or bought the share to redeem in the metal. You can only do that if you're an authorized participant with 50,000 shares or more. At least the last reading of the prospectus I did when the last year said that. I don't believe it has changed. It's well known that those ETFs don't give the actual gold to you when you need it for redeemability purposes. If you want the real physical metal, the best way to do it is to buy it and hold it, or buy it and put it in a vault, or buy it to where you have legal title to it and somebody else is storing it. Whatever is the best way for you is up to you. I'm not your financial advisor. I don't give legal advice. I'll put that little disclaimer up on screen. But that being said, there are many different ways to do it. The millennials choose ETFs. That may not be the best way if you want physical access to gold, but at least they're getting access to gold and silver price in their portfolio, which does to some extent tend to offset inflation, even though they don't have the real metal. I would always recommend, again, not your financial advisor, but if you're going to buy gold and silver, that there is less overall counterparty risk in buying the physical metal than there is any sort of derivative or paper related investment. However, it is extremely positive to see the millennials have turned to gold. And guess what? The rest of the world is as well. We're going to give you two stories and a video talking about what is going on with
the BRICS group is set to introduce a new currency backed.
I pressed the button before I was ready. What's going on with the new gold-backed BRICS currency? Let me play that video for you now.
The BRICS group is set to introduce a new currency backed by gold, in contrast to the credit-backed US dollar, with countries lining up to join the growing initiative.
The BRICS countries are planning to introduce a new trading currency which will be backed by gold. More and more countries recently expressed desire to join BRICS.
The decision comes a month ahead of scheduled Alliance Summit in Johannesburg, South Africa. 41 countries have since shown their interest in BRICS membership and its new currency implementation. Russia's foreign ministry has stated that if African states show enthusiasm, the group's expansion may also be on a Russia-Africa summit's agenda in the end of July. As of now, the BRICS group remains comprised of Brazil, Russia, India, China and South Africa. Former statistician general of South Africa, Pali Lehola, says the gold-backed currency will facilitate the advancement of developing countries.
Avoiding using the gold standard, we have gone for almost 45 years now, since 1980 when this was dropped. And we have seen the consequences, particularly of this to the developing countries, when the dollar was adopted as a standard and gold not as such. Yet against that, there's been accumulation of gold in the developing world. South Africa had a much stronger currency when the gold standard was still in force. By going the gold standard by many countries, that many African countries, of course, have, this will be of great benefit to strengthening the currency, the single currency that is backed by gold. It will facilitate development because, after all, currency is the quantity of material things that societies have. If you use another currency based on material wealth or material things you don't have, it means that you are at the mercy of that country, and and they will charge commissions and the like.
So I find it interesting that a statistician official from South Africa is talking about the need for gold-backed currency. See, it's not just the everyday people, the body politic, or the everyday citizens, if you will, that are interested in gold and silver. Governments around the world are starting to get into it. Of course, we've been reporting on Basel III requirements and how gold has been made a high quality liquid asset for the banking system, how the central banks are buying gold just like this to support their balance sheets. And now we have countries around the world joining in for a true gold-backed currency. This is something that does not surprise me at all in the least, but it has taken quite a while to get here. It's very interesting that the world's going back to a sort of gold standard or gold-backed currency in light of the various failures of fiat currency and what is likely to be a very nasty oncoming recession and potentially depression if the cycles work out correctly in the near future, not only in the United States, but across the world. We've seen that in data pop up in housing. We've seen that data pop up in jobs. We've seen that data pop up in various asset classes and demographics and over that we talk about on the program. The yield curve inversion, which is 100% correct in predicting an oncoming recession. All those signs point to it. We know it's coming. Of course, we've been in this positive business cycle since the Great Recession for almost 14 years. And that's one of the longest cycles in American history without a recession. So to say that we wouldn't have one coming soon would defy all the previous historical data. We know it's going to be here. How bad is it going to be? Well, look at what the world is doing. They're recapitalizing on what? Gold, not Bitcoin, not even silver, not platinum and palladium, not fiat currencies, not even central bank digital currencies. They're recapitalizing the system on gold, and all the rest of what I just talked about, other than silver, will be a derivative on top of that. So what is sitting at the base of the financial system, holding it up with a very strong 5,000-year history as a strong foundation? What is the foundation of the new financial system? As I've been saying, and now predicting, and now we're seeing coming out, it's going to be gold. Well, I've got one more story for you guys, and it has to do with the repatriation of gold by sovereigns. It says here from mining.com in a study published on July 11th, and this originally refers to an article from Reuters. Countries repatriating gold in the wake of sanctions against Russia, study finds. That's the title of the article. It says here, quote, an increasing number of countries are repatriating gold reserves as protection against the sort of sanctions imposed by the West on Russia, according to an Invesco survey of central bank and sovereign wealth funds published on Monday. The financial market rout last year caused widespread losses for sovereign money managers who are fundamentally rethinking their strategies on the belief that higher inflation and geopolitical tensions are here to stay. Over 85% of the 85 sovereign wealth funds and 57 central banks that took part in the annual Invesco Global Sovereign Asset Management Study believe that inflation will now be higher in the coming decade than in the last. Gold and emerging market bonds are seen as good bets in that environment, but last year's freezing of almost half of Russia's $640 billion of gold and forex reserves by the West in response to the invasion of Ukraine also appears to have triggered a shift. The survey showed a substantial share of central banks were concerned by the precedent that had been set. Almost 60% of the respondents said it had made gold more attractive, while 68% were keeping reserves at home compared to 50% in 2020. So not only are they investing the sovereign wealth funds and central banks in gold, but now they want to repatriate it because of the sanctions issue. They're now realizing they need to have it in their home jurisdiction under their control. One central bank, quoted anonymously, said, "We did have it held in London, but now we've transferred it back to own country to hold as a safe haven asset and keep it safe." Rod Ringrow, Invesco's head of official institutions, who oversaw the report, said that this is a broadly held view. Quote from Rod, "If it's my gold, then I want it in my country," has been the mantra we've seen in the last year or so. You can see it here on the chart, which I'll blow up a little bit for you in that article on mining.com, originally from Reuters. The gold holdings figure 5.6. How much is held in foreign central banks, foreign bullion banks? How much is held in country? The derivatives and gold ETFs and how they're investing in them. And you can see there's been a sea change investing in 5-year time. 74% of respondents want to hold gold in their own country. So that's a predictor, and not only a predictor, it's a confirmation by the respondents that they plan on repatriating gold. So expect to see more gold repatriation stories happening in the future. As I believe we get closer to recession, countries want to have their gold on hand. Plus, I think the geopolitical tensions have raised doubts about the legalities of holding gold in other jurisdictions when the world may go to higher geopolitical conflict. Now, this is not necessarily a concern for private citizens who may have legal title to gold in another country, although you may want to examine that. This more has to do with sovereign holdings in another nation, which those sovereigns may be engaging in geopolitical negotiations or even opposed geopolitically. And it makes sense countries want to repatriate their gold. It says here on the article, geopolitical concerns combined with opportunities in emerging markets are also encouraging some central banks to diversify away from the dollar. So we have some additional dollar dumping going on across the world, and people are buying gold with it. A growing 7% believe rising U.S. debt is also a negative for the greenback, although most still see no alternative to it as the world's reserve currency. According to the article, those that see Chinese yuan as a potential contender fell to 18% from 29% last year. So China's not doing itself any favors with its own political problems, but at least people are recognizing that the dollar is on its way out. They're just looking for that replacement. Right now it's gold. Whatever the next fiat currency is that they may use, still to be determined. But again, when you're switching currency systems, when you're dumping the dollar's world reserve currency, what do you go to first? Ding! It's gold, okay? This always happens during these types of events. At least it has during history, during the last 5,000 years when gold was used as money across the world. It goes on to say, the article, nearly 80% of the 142 institutions surveyed see geopolitical tensions as the biggest risk over the next decade, while 83% cited inflation as a concern for the next 12 months. Infrastructure is now seen as the most attractive asset class, particularly those involving renewable energy. Concerns over China mean India remains one of the most attractive countries for investment, so on and so forth. Very interesting, again, that gold is taking center stage. We have gold being repatriated by sovereigns. We have millennials investing in more gold than anyone else, albeit through ETFs, which don't allow the physical access to things like this. I would encourage you, if you're a millennial and you're invested in the ETF, consider this also. If you're already invested in gold, consider a little bit of this, if you will, as having it in your possession. And what this gives you is the power of the actual physical asset and not just access to price movements. This will do better for you in the long run if you're going to invest. At least that's my thoughts. Of course, be your own financial advisor, do your own research. And it's very interesting that we had an update on the gold-backed currency from the BRICS and the report from RT and how that is coming about. What is the world moving to as we get closer to the recession? Gold. Where is the world going to go every time we get closer to a recession? Gold. Where are the millennials and younger generation going who have been hit hardest by the pre-recession and will get hardest by the recession and the lack of growth of GDP? Gold. Okay. People in trouble or people who have financial concerns or people who have concerns geopolitically go to what? Gold. Okay. That's the theme of this presentation. I think I hammered it pretty well and you guys got it. So we'll go ahead and wrap up. Thank you everybody for joining the channel. Thank you to our channel sponsors. Kinesis, Rockridge Resources, a great projects up in Canada. Please go visit them, and everybody for supporting the program. We thank you so much. This has been our research report on Thursday for goldsilverpros.com. Do not leave the channel, ladies and gentlemen. We have the weekly market wrap up, the hottest and most important part of our weekly lineup, according to many of our listeners. A lot of them prefer it. It is my 20-minute market report on what's going on, not only in the gold and silver markets where I break it down, but I give you the biggest stories of the week. In case you haven't been around to read them, you're busy in your daily lives. I also give you the biggest economic data points. So you have that hard data as we go along to help you make decisions on where you may want to go. And you do that research and you make the decisions for yourself. And we empower you to do that by providing that report. It is a 20-minute, usually bite-sized view into the market in case you're super busy and you don't have hours to research on. We do that free for you on this channel. And of course, we'll be back with additional content. If you want more content right now, Gold Silver Pros, because it's compelling and you love it, go down below, click on our playlist and our other videos. We've got so much content. If you want, you could spend an entire day here, and we certainly wouldn't blame you for that. Thank you so much, everyone, for joining the channel. Until next time, this has been Rob 𝘾𝙀, your host with GoldSilverPros.com.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.